Now, trend lines will help you identify the trend, will help you identify whether we're in a bullish market or a bearish market. They one of the most common form or tool for technical analysis, but also the most underutilized tool. So if you do draw it in the correct way, then it is very accurate. Now, in the paid course, once again, I show you exactly how I draw it. I show you and tell you 4 basic rules that I stick by when drawing trend lines to help trend lines be more accurate. So the more accurate you are, the less losses happen. So that's a petty thing. There's so many sort of ways to draw trend lines that a beginner won't really know the correct way of drawing it, and they won't draw it right, and then it might screw up your whole analysis. The main problem with beginners is that they try and make the line fit the market instead of the market fit the line. So they force in the trend lines. They force in the trend lines so that they put it of what they want to see, which isn't the correct way. So basically, a trend line, it is sort of a line that connects two or more points, okay, top or bottom. That is considered a trend line. So you get the following different types of trend line formations: ascending trend line, descending trend line channels, so it's a bullish trend channel or bearish trend channel, triangles, pennants, flags. Okay. So like I said, I'm going to explain to you what trend lines are. So the first one is ascending trend line. Okay, an ascending means to go up. So in the name it is a bullish trend line. Now, like I said, it is drawn at the bottom of the trend, okay, touching the higher lows. That's where your ascending trend line comes. It acts as diagonal support. Price gets supported and then back up. So as you can see there, higher low and higher low, it keeps touching and gets rejected, supporting. The trend line supports the price to go back up. Those are the buying opportunities on those higher lows. So the trend line is just to help you confirm. So it's another confirmation. So it's market structure, it's candlestick formations. As you can see, first candlestick formation is a tweezer bottom. Second one is a morning star. So you got your trend line confirmation that it's a buy. You got your market structure, the higher highs, high lows. You got the candlestick, candlestick formations. And then you can put your Fibonacci, whether it's the 61.8%, 78.6%, 50%, whatever it is. You buy, you profit. Now, as you can see, here's an uptrend. So from that point to that point, from that point to that point. So you remember, it's 2 or more points. So I'm going to just take it from those 2 points. So from here to there, and boom. Can you see how it broke? It didn't support, made a lower low, came to retest, and you sell. All right, so let's see here. So price made a lower low here. Let's get this out of the way. So as you can see, higher high, higher low, ooh, lower high. So lower low, lower high, equal low. Lower low, lower high, equal low. Okay, so let's see what happens. Reason why I did that is because remember, you always want to start plotting your market structure and everything from the recent sort of trend. So as I said, here's your higher high, higher low, lower high. This is where it changed. So I start here. I can even put a lower high here. So I start there. And I go lower high, lower low, lower high, low, equal low. And now we're pushing up. So let's see where we're at. Price pushed above, started rejecting. So that's a higher high. Higher high. So now we're waiting for higher low. There's our high low. As you can see, price got rejected. So higher low. Pretty simple. So now regarding trend lines, okay, equal high, I'll just put that there. Okay, so as you can see right now, these 2 points here are the most recent major points. It stands out. If you don't see it stands out, don't worry. The more you analyze and the more you practice, your eyes will adjust. So these are the main 2 points. And remember, you need 2 points to identify as a trend line. So what I'm going to do is I'm going to take my trend line from this first point, going to drag it to that. By the way, the trend line is here. First one, you go to trend line. First one as well. Okay, so from that point, you drag. So there's point 1, supported, pushed up. Let's see what happens. So this is an ascending trend line because as you can see, the market is ascending. Okay, boom, rejected, broke through, lower low, made a lower low. So now, sorry, I forgot to put this higher high here. Remember, it's the points. So from this low point to that high point, from that high point to that low point, from that low point to that high point to that low point. So now we need to wait. Where is it going to land? Is it going to retrace fully there? Let's see. Let's put a Fibonacci. Okay. Oops, not 2. Okay, so it rejected the 38. Why though? Oh, this higher high. Okay, but don't worry about that. So what candlestick pattern did it make? Not really. So I wouldn't have traded this. But as you can see, we're talking, let me just remove this. I don't want to confuse you guys. We're talking about the trend line. So as you can see, it supported once, supported twice, third time broke. I would have wanted here to retest the trend line and maybe the 78.6%, and then this consolidation over here. Okay, those who did the paid course know what I'm talking about. And then I would have entered there, but it never happened, so invalid trade. But that's the ascending trend line. That is the ascending. Okay, the second one is a descending trend line. So it's obviously the trend line for a downtrend. Now, this trend line is the one above. Okay, it is above with the lower highs now touching, not the higher lows, the lower highs touching the trend line. So, like I said, drawn on top, okay, diagonal resistance. So the ascending acts as support, okay, which we'll talk about later, and the descending trend line will act as resistance, which we'll also talk about later in the same topic. Okay, let me show you a descending trend line. Now, as you can see, we're in an uptrend. So I'm gonna wait for, there we go, right? So this is the previous higher low. As you can see, price broke out, but we can't say that's the lower low yet. We need to see that swing point, okay, the trough. Okay, there we have it. So now you know this is a lower low. Lower low. Okay, let me just put this here, higher. That's a higher high. That is a higher low. So as you can see, okay, now I'm working backwards, but anyways. So there's your higher high, high low, high high. Then price breaks that higher low to make a lower low. So now we need to see, you know, where is it gonna make a lower high? Pushed, pushed. There. Okay. So over here it made your lower high. Now, remember, you can do your things like your Fibonacci, 78.6, you know, bearish engulfing, whatever the case might be. But that's not the point. Point is now we want to put a descending trend line. So remember, this is the recent 2 points. Remember, the descending trend line is above the lower highs. Now obviously this is not a lower high because it was a previous high. That still counts. So you start on this one, you drag it to that one, and you just drag it to the future. Okay, so now we need to see where's this gonna, okay, here's your new lower high, lower low. Lower low. So now price can come up, push here with the trend line, and I go into detail with this in the other course. One of two things can happen. Price can come push to the trend line and it can reject and you sell, right, on that rejection, or price can push up, then reject, retrace, and then you buy. So those are the two things that can happen with a trend line. So we need to see, is price going to come up, reject this, and then we sell, or is it going to push up, break past, retest, and then buy? Or it can even come up to, let's say, here, and, you know, form a lower high here, and then come down. All right, so let's see what happens. Okay, price is pushing up, indecision, indecision. Okay, price push down to form this lower low here. Okay, but it first formed this lower high over here, lower low. Then price pushed up. Now, price broke this lower high to form a, we'll see, high high. Okay, however, remember, it can still reject this trend line. And I mean, if you put your Fibonacci from this lower high to that lower low, it is a 7.8. So even though the candlestick passed, the wick can pass the 100%, that's fine. But if this candlestick closes around the 78.6, it still can be a rejection and it can still fall down to be a sell. So if it rejects that 78 and the trend line, then we sell. But if it breaks above, okay, we need to wait for the retest on the trend line and then we look for a buying opportunity. So let's see what it does. Okay, we closed above. Now we need to wait for that swing point. There you go. So here is the new higher high. So now we need to wait for the retest on the trend line. As you can see, price, there's a big bearish candle, then there's a smaller one, and then there's an indecision candle. Morning star. So would most likely buy here. Write it up. Let's look left. Can write it up to this point, that point, even go higher. Okay, but that's not what we want. We're on the trend line. So this trend line is a break and retest, descending trend line. Oh, there, it even touched better. Okay, tweezer there. And the fact it still retested the trend line and pushed up. So that is a descending trend line. I mean, you can even put it. Okay, I'll show you channels next. So the third one is an ascending trend channel. So it's like an ascending trend line. It's just there are two lines now. It's like a channel. Price is within the channel. So there's an ascending line on the top, so on the higher highs, and there's ascending line at the bottom at the higher lows. So as you can see there, ascending trend channel. So there's one on top and one at the bottom. So like I said, so let's say these 2 points here. Here and there, okay, and then here and there, right? So an ascending trend channel will be like that and like that. As you can see, it came up, touched, rejected, could have sold. So here, higher high, just put those higher high, higher high, higher low, higher low. We need to wait for it to break past this to confirm a sell. There you go. Okay. That is an ascending trend channel. That's an ascending trend channel. And then the last one is descending trend channel. So it's the opposite. So it's like a descending trend line. However, there are two descending trend lines. So one on the lower high on top and one at the lower low at the bottom. As you can see there, descending, slanting down. So here's our previous example. If I just look to the left, here's a descending here. As you can see, let me just remove those. As you can see, lower low, lower low, lower low. Here's a lower high, lower high, lower high, right? So like that, something like that. Something like that. So I'm going to show you sort of a recap. So let's say for an ascending sort of trend line, let me change the color so you know. So remember, it's bullish. Now, for an ascending trend line, the market needs to be making higher highs and higher lows. Okay, so for an ascending trend line, high highs and high lows. So now your trend line, let's start here. This is an ascending trend line. That's how you'll put it. And then your buying opportunities are here. This is where you need to buy. There. Okay, obviously you can't really buy on the first two. You have to wait after. Well, you can buy on the second one, but on the first one you can't really buy. So yeah, that's your buying option. I mean, if it goes again higher high and it comes down and you can see it rejects, that is another buying opportunity. So you need to buy that because it made a higher low there. Higher low. Okay, so that's an ascending trend line. Now if this happens and price comes down, rejects back up, sorry, makes a lower low, wait for the retest and other confirmations of this lower high, and then this is where you need to sell. That's where you need to sell, because now it changed from an uptrend to a downtrend, because remember it broke the market structure and it broke your ascending trend line. Remember, your ascending trend line is to go up, but now it's broken, so it needs to go down. That is an ascending trend line. Descending is when the market pushes down. Makes a lower high, lower low, lower high. So just like that. So now your descending trend line is like that. So if it comes here and you can see it starts to reject, okay, I mean, you can put your Fibonacci, 78.6 trend line, candlestick formation. That's when you need to sell, because it's going to make a lower low. However, if it breaks above, makes a higher high, retests, then I mean you can put your Fibonacci on the other side, from there to now there. 61.8%, it broke the trend line, retested, made a higher low, candlestick confirmation, and then you look to buy. Can you see how everything sort of intertwines? So that's a descending trend line. An ascending trend channel is the same as an ascending trend line. It's just it's in a channel like this. So price will basically come there, come like this. Up until the point it either breaks below, retests, sell. So as a beginner, remember you want to always buy on the higher lows. So buy there, buy there, buy there. If you're more of an advanced trader, then you can sell on these, but it's short term. It's quick pips, minor pips on these, you sell. Okay, but I wouldn't suggest that. Remember, you're going against the trend if you're selling that, because the trend is bullish. So that's the recap of the ascending trend channel, and then you get your descending trend channel. Where it's going down. So price makes a lower high, lower low, lower high, lower low, lower high, lower low, lower high, up until the point it breaks above or breaks below, whatever the case might be, but you're looking to sell on the lower highs of where it is touching the trend line. Pretty simple. Pretty simple. All right. That is trend lines.